They don't want you to notice this. Not yet. Not while you still have time. Right now, in quiet corners of the financial system, something strange is happening to silver. Orders are being delayed. Accounts are being reviewed. Shipments are suddenly unavailable. Prices are being frozen, then jumping overnight, and most people have no idea why. But what if I told you? This isn't random. This isn't bad luck. This isn't supply chain issues. This looks a lot like the early stages of a financial lockdown. A lockdown on physical silver. And if this continues, 1 ounce of silver could soon cost over $100. Not on paper, but in the real world. Today, we're going to break down what's happening. Why banks and dealers are quietly blocking buyers. Who benefits from this? And what it means for you. If you care about protecting your money, your future, and your freedom, you need to hear this. Before we go any further, take 1 second and hit like and subscribe. It helps this channel reach more people who are trying to understand what's really going on behind the headlines. Here on the Gray Ledger, we don't chase hype. We follow the money, and we tell the story no one else wants to tell. Now, let's begin. A few months ago, something unusual started happening. People who had been buying physical silver for years, quietly, consistently, without any problems, suddenly started hearing the same words. Out of stock. Delayed shipment. Account verification required. Order canceled. Please contact support. At first, they thought it was just temporary, a warehouse issue, a shipping delay, a website glitch. But then it kept happening. Across different states, different dealers, different banks, same story. Meanwhile, the paper price of silver barely moved. On financial news, silver looked calm, boring, stable. But in the real world, where people actually try to hold metal in their hands, access was shrinking, premiums were rising, inventory was disappearing, limits were being placed. And suddenly, small buyers were being treated like threats. Let's talk about why. To understand this, you need to understand one simple truth. There are two silver markets. One is the paper market, the other is the physical market. The paper market is made of contracts, promises, derivatives, and digital numbers. It's where banks trade massive amounts of silver that doesn't physically exist. 1 real ounce can be sold, promised, and resold dozens of times. This is where prices are discovered. This is what you see on TV. This is what apps show you. But the physical market is different. It's where actual metal changes hands, bars, coins, rounds, heavy, cold, limited. And here's the problem. For years, banks and institutions have controlled the paper market. They can print contracts. They can create supply on screens. They can suppress prices. But they cannot print metal. And now, the gap between these two markets is growing fast. Industrial demand is exploding. Solar panels, electric vehicles, AI servers, medical equipment, defense systems, all of it needs silver. At the same time, mining production is falling. Costs are rising. Regulations are tightening. New discoveries are rare. Less supply, more demand. Basic economics. But instead of letting prices rise naturally, the system tried to hold it down using paper, using leverage, using complex financial tools. And it worked for a while, until people started asking questions, until regular buyers started stacking, until investors stopped trusting numbers on screens and started wanting real metal. That's when the pressure began, because every ounce that leaves the vault weakens the system. Every delivery exposes how thin supply really is. Every shipment reminds everyone that paper silver isn't real silver. So what do if you're a bank sitting on massive paper exposure and suddenly people want physical? You slow them down. You create friction. You build walls. You call it compliance. You call it risk management. You call it policy updates. But in reality, it's a quiet form of rationing. Some buyers now report smaller order limits, longer verification, random reviews, higher minimums, delayed withdrawals, and sometimes no explanation at all. It's not always obvious. It's subtle. Just enough to discourage, just enough to filter, just enough to buy time, because time is what they need. Time to rebalance, time to cover positions, time to unwind risk, time before the real price is revealed. Let's talk about that price. The famous $100 silver sounds crazy until you understand history. In 1980, silver briefly reached the equivalent of over $150 in today's dollars. During inflation cycles, metals don't move slowly, they move violently. Gold runs first, silver follows harder, because silver is smaller, thinner, more emotional. When confidence breaks, silver doesn't climb, it explodes. And here's what's different now. Back then, debt was lower. Derivatives were smaller, markets were simpler. Today, everything is leveraged. Governments are drowning in debt. Central banks are trapped. Currencies are being diluted. Trust is fragile. And once it breaks, there is no rewind button. We've seen this pattern before. In 2008, banks froze. In 2020, markets locked. In 2023, regional banks collapsed. Each time that the public was told everything is fine, until it wasn't. Silver is giving similar signals now, not in headlines, in logistics, in backrooms, in policies, in shipping schedules, in sudden shortages. This is where smart money pays attention, not to words, to actions. When banks start restricting access to real assets, they're preparing for stress. They're protecting themselves, not you. Think about this. If silver was abundant, why block buyers? If supply was strong, why ration? If everything was normal, why delay delivery? You don't restrict something that's plentiful, you restrict something that's scarce. And getting scarcer. Meanwhile, large institutions still get priority. Bulk buyers, government-linked funds, industrial partners, they move first, retail moves last, always. By the time headlines admit there's a shortage, it's already too late. That's how these cycles work, silently and suddenly. And when prices finally reflect reality, access disappears, not just affordability, availability. You can have money and still not get metal. That's the real lockdown, not price, access. Now, let's be clear, this is not about panic, this is about awareness. This is about understanding how systems behave under pressure. They don't collapse dramatically at first. They tighten, they narrow, they restrict. Then, they snap. And when that happens, the rules change overnight. Limits appear, taxes increase, reporting expands, movement gets tracked. History shows this again and again. Gold in 1933, bank accounts in Cyprus, cash limits in Europe, withdrawals in Asia, different times, same playbook, and silver. Because it sits between money and industry, is especially sensitive. It's both an asset and a resource, which makes it strategic, which makes it controllable, which makes it vulnerable. So where does that leave you? It leaves you with a choice: stay asleep or stay informed, trust headlines or watch behavior, react later or prepare quietly. Here on the Gray Ledger, we don't tell you what to buy. We tell you what to notice. We tell you what patterns mean. And right now, the pattern is clear. Physical silver is being quietly managed, not for your benefit, for system stability. Because when too many people want the same real thing at the same time, the illusion breaks. And illusions are what modern finance runs on. Near the end of every major cycle, people say the same thing. I didn't see it coming, but the signs were always there, in shipping delays, in policy changes, in temporary restrictions, in sudden rule updates, in quiet rationing. That's what this is. Early, subtle, but real. Now imagine a moment in the near future. Inflation spikes again, markets wobble, confidence slips. Suddenly, silver jumps 30, 40, 60, then triple digits. Not because of hype, because supply can't meet demand, because vaults are empty, because paper promises are questioned, because people want something real. And by then, dealers are closed, waiting lists are full, premiums are insane, delivery takes months, and the same institutions that slowed you down are sitting comfortably, prepared, protected, positioned. This isn't a movie. This is how financial stress unfolds, quietly, until it's loud. So what can you do? You stay informed. You stay calm. You think long term. You don't chase spikes. You don't follow panic. You don't wait for permission. You learn. You observe. You move before crowds. That's how resilience is built. Not through fear, through understanding. And that's why this channel exists. Not to scare you, to prepare you. If this video helped you see things differently, if it made you think, if it gave you clarity, drop a comment below and share your thoughts. Do you think silver is being restricted on purpose? Have you noticed delays or limits? What are you seeing where you live? Your experience matters. And when you share this video, you help someone else wake up before it's too late. So hit that share button, send it to a friend, post it in a group. Let's keep this conversation alive. Because information, in times like these, is more valuable than gold, more valuable than silver, and more powerful than fear. This is the Gray Ledger, and I'll see you in the next one.